Hi guys, this is Alelo Sylvester and today I'm going to show you how I consistently make over $1,000 trading the news. I welcome you to Digital Cash Point FX Special. Digital Cash Point is an online community for technical traders where I give up-to-date analysis on forex, cryptocurrencies and stocks. And today we'll be talking about fundamental trading. If you're new to my channel, welcome. If you're returning, welcome back. My channel is relatively new, so I would really love if you could hit the subscribe button and the bell notification icon to get updated when I post content like this. So without further ado, let's dive right into it. Hi guys, welcome back. So there's a follow-up video to my last video, how I make $1,000 trading the news. Today we'll be talking about introduction to the structure. If you haven't seen the last video, just kindly pause this video and go check out the last video. This will greatly help you understand the concept way much better. Also, only a little percentage of my viewers are actually subscribed, so if you can kindly click the subscribe button, it will greatly help this channel grow better.
All right, so we said that the first is that you have no power over the spread, which is a great limitation. The second thing we spoke about is that you have limited equity. You do not have all of the equity to face the market head on. So you want to trade in alignment with them. And that is also very key, and that's very, very important. And thirdly, we went on to say that one of the power that you have as a retail trader is that you can follow the breadcrumbs. And a lot of traders wanted to be very, very technical about, trading, and they tend to, put a lot of indicators, on the screen. They add a lot of, trade patterns, this, that, and they are trying to predict the market. Now, when you try to predict the direction of the market, what you do to yourself is that you expose yourself to greater risk. And what you should do as a trader is try to identify where the huge banks, where the institutions, right, are trying to trade, what direction they are trying to take the market to, and then you trade in alignment with them, right? So there are two kinds of trend, basically. There's what we call the retail trader trend, and there's what we call the true market trend. Right? Now, the retail trader trend is basically the trend that every retail trader sees based on their technical analysis. They do this. They use this a Fibonacci extension, this a Fibonacci ratio, they do this, they do that, right? And these are the kind of trade setups that they see. And there's what we call the true market trend, right? And those are the trend that the institutions, they trade, right? So what we can be trading as retail trader as trends can be basically pullbacks for them, right? That can also be manipulations for them. Before they can take the market in the actual direction that they want to take the market to. And that is basically what, I'm going to infuse that in basically getting you to understand fundamental trade setups. All right. So that is that. And lastly, also as a retail trader, you also have one advantage, and that is because of your leverage and also due to correlation in price, you can maximize your win rates. I will go over what I mean by this. When I say leverage, I'm talking about you being able to use a larger amount of lot size. Now, when you become most proficient at this, believe me, you can take one trade. Know this. You can take one trade in a month, and that one trade will give you all of the money you need to make for the entire month. It prevents you from chasing over trades. Please get this right. This is very important. You can only take one trade. If it's one trade you take, and believe me, the setup presents themselves more times than I can even state out, right? But if it's one you are able to take with the ability of leverage, you can optimize your lot size and take that one trade, and you are done, right? I use this to trade, just one setup. I can trade one setup for this, and I can make over $1,000 just trading one setup one day. All right. So I look out for these setups. I plan for them. I wait for them. They play out the way I want them to play out, and then I pounce on them. I can use a standard lot. right? In time, you can also get to that point where you can be trading a standard lot. You can even increase your lot size above that as you build more confidence on the setup. Please, I'm not saying that when you are done with this class, you should go and then start opting your lot size, start using ridiculous amount of lot size. No, I'm saying that go out there, start trading this setup, build your consistent with it, build your confidence level with the setup, and then you will be the one to decide what lot size you want to use eventually. All right. So due to the ability of leverage, we can maximize our win rates by increasing our lot size. We don't have to trade more. We just have to trade smartly. We just have to trade, we just have to be more consistent. And also, when we talk of correlation, what that means is that when you begin to understand that the impact of a particular news on one currency pair can also affect other currency pairs, right? You can do your analysis from one currency pair and trade it in 2 or 3 other currency pair that that is tightly correlated, right, to that particular currency pair, right? So I can take a particular setup, I can do my analysis on a particular setup on GBP USD, right? Now, because I understand that the ratio between euros and GBP is usually 1:1, that simply means that the euros is tightly correlated to the Great British pound, right? That simply means I can take one setup with Great British pound cross USD, right? And take that same setup on Euro USD, and they will all play out the same. I can now maximize the amount of what pips I can get out of that trade. All right. So instead of me looking out to get 100 pips for a particular trade, right, I can just decide to take 50 pips from a particular trade and take 50 pips from another. All right. So we've gotten all of those information out of the way. Right now, we're going to look at the components of the system. We're going to look at the components of the system. Very, very important. And all right, so we're going to explain each of these components step by step, and you'll get to understand what I mean. Now, the first component of this system is the sessions indicator. All right. If you can have the sessions indicator, because some of you will be trading from your phones, right? All you just need to do is add the day breaks. All right. What that means is that you can partition your days, right? So that each days you can see the entire move for a specific day, and then you can trade based on the structure of that. All right. So you want to add your sessions indicator if you have a laptop. You want to add your sessions indicators, and I'm going to show you what I mean by that. And if you don't have a laptop, you can add your your day breaks, and just be able to identify that structure within the specific day. All right. That is the first component of the system. What that means is that this is a day trading strategy. All right. There are people who trade higher time frame, 4 hours, 1 day. There are people who do analysis from 1 month. What I'm basically showing you is waking up in the morning, going to Forex Factory, check for the high impact news that are going to be coming out for that day, right? Identify the proper news that you want to trade. Go back to your MT4 and analyze your charts on a 1 day session, right? On a 1 day time frame. I'm not saying trade from a daily time frame. I say you're analyzing from a 1 day time frame. All right. The time frame that we'll be using for this particular setup, right? The time frame we'll be using for this particular setup will be the 15 minutes time frame. The next component of the system is your currency strength. And the reason why we want to talk about currency strength is very, very important too. And where you can easily identify the strength of a particular currency is if you go to currency strength meter. So you want to go to your Chrome browser or whatever browser you're using, and you click on this, you write currency strength meter. Come down here. Now, what this does, that it basically shows you the strength of every, of the major currencies, at a particular time frame. All right. So what you are seeing right here, when the bars are filled up, it simply means that that currency is strong. Now, but what you want to be looking out for trading this, right, or looking at your currency strength meter, you don't want to see it being, totally being filled up, right? What you want to look at is you want to look at the currency pair. All right. So if, for example, you are trading Euro USD or you are trading GBP USD, what you want to check is this. You don't want to see a system whereby, let's say I'm trading AUD Canadian dollar. All right. Let's say I want to trade AUD Canadian dollar. I don't want to see something of this nature. I don't want to see Canadian dollar being flat in strength, right? And seeing Australian dollar being very high. I don't want to see that. What I want to see for that particular currency pair I'm trading is a 1:2 at minimum. All right, I want to see a 1:2 kind of setting. What I mean is what we see from NZD and CHF right now, right? Or USD and CHF, all right? Or what we have here between GBP and Euro, right? You are seeing that if you, multiply a particular currency strength by 2, minimum, right? Multiply it by 2, it should give you the other currency pair, all right? So you don't want that discrepancy to be too large if you want to trade the news. So let's say a news is coming out for dollar, right? A news is coming out for dollar, and you want to trade GBP USD, right? You want to trade GBP USD. What you want to see is this kind of setup, right? You want to see GBP, being high a bit, dollar being high a bit, right? Or you want to see dollar, being, let's say, average. You want to see GBP being, a little bit high, right? Or you want to see them at the same, strength level. You want to see that as well. What you don't want to see is USD being at 1%, right? You see USD being very low, and then you see GBP being very high. Now, what that does is that it doesn't enable the market to actually move properly, right? So a setup can play out properly. All of the, the setup can, open up quite nicely, and then the market doesn't move. The reason the market doesn't move is because, the particular currency is very low in strength. All right. So if I wanted to trade any news, I will not trade a news that involves Canadian dollar at this point, because you can see it's very, very low. I need Canadian dollar to at least have some margin of strength. All right. Please note, I am not looking at this to identify which is stronger. All right. So this is basically what I'm talking about. I want to trade, let's say I want to trade Euro USD. All right. I see a news for Euro USD to be released. Let's say we're looking at the time frame, let's say 2:30 p.m. Nigerian time. Sorry. All right. So I'm looking at this news to be released, right? And then I come on my trading platform, right? Look at this. So I look at this particular, currency pair. The news is coming out at this particular time, and let's say by 2 o'clock, I'm online, and I open my currency strength meter, and I see euros having all the bars completely being filled, right? And then I see dollar, having just one little bar, might just be 1 or 2, right? Now, if I see that, now please know this, the market can still move, but what this does, that it creates a lot of uncertainty about that particular trade, all right? Because the setup can be for dollar at that point in time, and you want to sell this pair. The setup can be telling you that dollar is going to buy, so definitely this Euro USD will sell, right? The setup might be showing you that, but because the dollar strength is so low in comparison to the euros, it will not even move. The market will not move, or you see the market move just a little bit and then still come back up. Now, we saw that a lot for the AUD pairs since the beginning of January. Actually, AUD has been very, very strong. AUD has been very, very strong. So a lot of news that came out for the month of February, right, that had to do with AUD, pairs being crossed with AUD, didn't really move that much because the AUD pair resisted the movement of that pair. All right. So you always want to trade the setups that are at least 1:2. And that's what I showed you guys just a few moments ago. All right. So that's what you want to trade. So let's go back there so you can see it properly. All right. So you want to see at least 1:2. That if I were to multiply this by 2, it will give me this. All right. So I can trade this. Now, the reason I want to trade those that have 1:2 setup is that this can change at any moment in time. So the moment the news is being released, this guy can just pop all the way back, all the way up here. The strength will just become extremely high, and this will just drop all the way down. And then you see the market going in the direction of CHF. All right. All of these things are orchestrated. But if the strength is so low, right, even when that news comes out, it won't really move that much. All right. So that doesn't mean that you should now trade in the direction of the currency that is very, very strong. No, the setup, is also very important. That's where the other component of the system comes in, which I'm going to show you. Right. So I just had to get that out of the way. That's very, very important. Very, very important. So you need also to check the currency strength. All right, we've seen a lot of setups that didn't go because of the currency strength was so very, very low. All right, and the currency strength of the other was also very, very strong, so it resisted the movement of that currency. All right, so the first is you want to have the session indicator. You want to have your days break, right? 1 day. What I mean is going to look something of this nature. Look something of this nature. All right. The screen is going to be partitioned in this nature, whereby this region from here to here will symbolize 1 day. All right. So there are specific setups that you're looking out for within the day that you can trade for the news. All right. So that's what I mean. All right. So the third component of this system is the structure. The third component of the system is the structure, and this is what we're going to look at right now. The fourth component is the timing, which is also very, very, very important. All right, and then we're looking at price action. So these are the components of the system that you want to trade for the news. Now, when all of these correlate together, you can take that trade. You can even take 10 standard lot on that. You will know that that trade will move in the direction of the setup. It must move in the direction of the setup. All right, so that's what we're looking out for. All right. Of all of these, if this were to be arranged in the order of importance, the first will be the structure. All right. You can jot that down. The first will be the structure. The next will be the timing. All right. The third will be price action. And then you're looking at strengths and session indicators. All right. So that is that. That is that. So let's look at the structure. Let's look at the structure. What are we looking out to see? It's each day we have several sessions each day. All right. You probably have learned before that there are about 5 sessions each day. Well, we have the Sydney session, we have the Tokyo session, we have the London session, we have the New York session, right? And we have the Frankfurt session. All right, I'll go over it again. I said that we have around 5 sessions, right? Based on conventional textbooks. And what we read out there when you go on the internet, you ask for forex market sessions, right? What comes out is usually 5. You have the Sydney session, you have the Tokyo session, you have the London session, Frankfurt, New York, and all of that, right? What I said is cancel that from your head. That is a marketing plot. It is a lie. It does not exist. What you want to do is you want to focus on 3 sessions. There are only 3 sessions that actually move the market. One, we have the Asian session. We have the Asian session. 2, we have the London session. And lastly, we have the New York session. All right. So these are the three sessions that actually move the market. And each sessions, please note, each sessions are open for around 9 hours. All right. Each sessions are open for around 9 hours. Another marketing plot that is a very big lie is that only trade the what overlaps. Please, this is very, very important. What I'm saying is very, very important. You've been told that during the overlaps, the market tends to move more erratically, right? That's what you were told. But please remove that from your mind. Each of these sessions, there are key times that you can trade them. All right. And that is why when the news correlates with such times, it is very, very powerful. The Asian session, the London session, and the New York session. You would only want to trade the London session and the New York session. That means your trading window to trade the news, your trading window to trade the news is from around 8 a.m. in the morning to around 3 o'clock, 3 p.m. in the afternoon. All right. That is the margin I'm looking out for. All right. So every news that presents, it be the right news within this time frame, that is what you want to trade. All right. So we'll go over this when we're talking about the timings properly. All right. What we want to basically talk about is the structure. Now, what is the structure? Now, I said we have the Asian session, we have the London session, and then we have the New York session. So those are our fundamental three sessions. All right. We've added your session breaks, right? Or you've added your day partition or your day breaks, right? So this marks 12 a.m. in the morning. All right. This marks 12 a.m. in the morning for the next day. All right. On Nigeria time, this will be around, it changes based on daylight time. It'll be around 10 to 11. All right. That'll be around 10 to 11. So this 12 is what you see on your broker time server. Please note all of these things that I'm saying is very important. Right. So this is the time you see on your broker time server. So if you are trading with a server that is in probably South Africa, right? You see that the hours are 2 hours different from the GMT time. But if you are trading Nigerian time, right, your time will be showing you around 10 p.m., right? Or around 11 p.m., depending on the session, if it's a daylight time you have, or we have the normal time. So we have this, and when the market opens up each day, right, each sessions have its specific move. I repeat, each sessions have its specific move. The entire business of the Forex market is your ability to identify key support. This mouse is misbehaving. It's your ability to identify key support and resistance points. All right, key support and resistance point. What is support, right? We're looking at this below, right? The resistance on top. So if you are able to identify key support and resistance points where the market makes a reversal, you can always be at a good trade entry with limited stop loss. All right? Did you get that? Now, how do you identify those key support and resistance points? And that's what I'm going to show you. All right?